For several weeks, I'm looking at the stock market, and there's really very hard to find anything on the stock market right now. Everything's super high. It's almost the same as 2022. It was very, very hard to find things. Um, it doesn't matter what country. Will 500 is all the companies. So if you look at 21 and then 22 was very hard to do anything because it was going down. A lot of people think they're gurus and they're experts. When the market is going up, the S&P 500, 75% of the companies follow it, and around 5 or 7 companies own 50% of the entire stock market. So you're not really diversified. So if you're going with the market, or you'll be going down probably. There's SPY. They call it Spider. S&P 500 is the 500 companies. But when you look at this, that's when the tariffs said, Trump said that the tariffs will be there for sure. And then he changed his mind the next day, and the stock market went up like 10% overall right here. So this looks like it's already going down, but it doesn't matter which one it is. Look at Mexico. Mexico, this is a daily Mexico. It's a bull 3 times. In January 25, a year ago, it was just below 10. Now it's 40. It's very high. You look at Korea. This is a bull too. Look what happened to Korea. I was looking at this and going, what's going on with Korea? Are they gonna the country's going to go bankrupt or something? It went really, really low, below 30 here. And then they change, I guess, the way the country works. I'll look at them from 30 to 524, 15%. So it's high. It won't be like that. But you look at Korea, and it's kind of cyclical. It goes up and down. What was that? 2015, 2020. Then it kind of went down and more down. So is it tenfold? No, it's more than tenfold here. QQQ here. This is a normal one. It's not leveraged. It is one of the most established and actively traded ETFs in the world. Huge tax exposure. Underlying index Nasdaq 100. So that's QQQ. And when you look at TQQ, I like TQQ. It goes up fast and could go down fast, but there's 100 companies in there. So they kind of follow each other when you see. It was from around $4 to about 45. Here about 9, reached about 45. And here it's about 56, but right there it's coming down. It's a very, very hard market right now. Warren Buffett, he keeps cash. A lot of people say be in the market. Well, no, I think that's a lie, because if it's cyclical like this, why would you want to be in the market at all times? Warren Buffett isn't, and he's not diversified either. Like 5 or 6 of his stocks is like 80% of the total of his portfolio. If you look at the Buffett Indicator, this is why he's keeping a lot of cash. This is Buffett Indicator. Basically, what it is 5,000, around 5,000 companies in the United States traded, and what he does is, what does this say? Well, it's GDP. I think it's GDP or stock market value divided by GDP. I think that's what it is. And look how high it is. It's never been higher. The best was in 2009. Can I do it all? Yes, I can. Oh, there you go. This is where Warren Buffett made the most money, from the 80s and 90s. Look how low this is. This is where all the money was made, huge amounts of money every year. It went up so much. The last 10, 15 years, Warren Buffett, it's not even close to what he was making year after year and here. It's not even close. So that's why he's keeping like $200 billion cash, because there's nothing really right now that he could buy. Everything's too high. Let's see, that's Korea. This is financial. That's a bull 3 times. Again, look at it from 56 to 180. Here, when tariffs were delayed 90 days, it went from 90 to about 132, and it's kind of going down. So let me see, SPY. Same with the S&P 500. I was looking at it for years, and about 75%, if the stock market is going up, about 75% of this company is going down. If the stock market is going down, about 75% of them are going down. So this is why a lot of people says you can't beat the market. The only way you can beat the market is having individual stocks, which is a little bit risky, or having something like TQQ, which is very hyper, very aggressive, but you don't keep it all the time. You go in maybe a year or two, or even now, not even a year. It was from April to about April to November, several months, and just go out. This stock, if you actually just put it in and kept it, it was at 23 cents. It went all the way to 60, so that's 4.25 cents, and so that's 60 times 4, 240 times. But if you actually sold here, let's say, and bought here and sold again, you would have like 500-600 times. So that one's a good one because it has a whole bunch of companies, not just one. Because if you choose one, you probably lose, or you get rich. But just you choosing one stock is a little bit too risky. Mexico, look at Mexico, from 10 to almost 40. This is Vanguard Total World Stock Index. What does it represent? Just the states or everything? Emerging, Vietnam, Kuwait, small cap, hold those stocks in that may not hold. Anyways, that's Vanguard. There's another one. Which one is that one? U.S. total market. That's similar to that's Will 500. So again, you look at the whole picture of all the companies and look how high it is. So now it's not a very good time to invest. When you look at RSI or MACD, it's really nice to put it in when it's like March 20. That's when you put it in. Again, it went all the way down. Half a year ago was nice, but now it's going down. You don't want to put it in there right now. I wouldn't. There's some that are. Another one you want to look at is the VIX. Let's add VIX to it. VIX. Volatility. So let's look at VIX. When it's very, very low, this is when the market usually starts going down. When it's very, very high up, this is weekly, let's go. When it's very, very high up and then it starts going down, that's when you invest. Going down, that's when you invest. You don't invest when it's at the very bottom going up. That's when the stock market goes down. Same with which one is that one? March, April. Is it April? March 25. Again, that's when the stock really tanked because it was going up. And then after, when it was announced that tariffs were delayed like 90 days, what day was that? Is that weekly? Oh no, daily. That's good. That is exactly April 8, I think. So it started going down. So the next 2 days will be excellent to go in and be there for a while. Same with COVID. Where was COVID? That's 24. Something happened here. I don't know. COVID was, there you go. Look at that big line right there, COVID. When that goes in, you probably want to sell when it's a big gap like that. It's never happened before. And then it happened really fast though. When the stock market goes down, it goes at least 3-4 times faster than it goes up. And what was that? February 20 to about March 20. 1 month. 1 month until the stock market tanked like 25% or more. And then when you look at it, the next days is about here. It does went down. March 18, 19, 20. This is when you want to go in the market again. Some stocks you would keep, like very big dividends or whatever, but most of them now, they're never been so high. Western Digital, Facebook, all the big guys. Even if you have the SPY, it's not good because all those tech companies, like maybe 6 or 7 of them, is worth 50% of the whole total stock market. So that's not even diversification. It's completely not. So if they go down a lot, 50%, this goes down to like probably right here. Just the 4, 5, 6 companies are in there on top. So that's my view.